rich cannot accumulate wealth without the cooperation of the poor in society.
Or at least the potential for Bitcoin to be this, borderless store of value is that it does ultimately look more like gold, but how to think about that during the adoption trajectory is the tricky part. And I've heard you or somebody on the roundup kind of say it's like 50% NASDAQ, 50% gold. And I think that's a bit what we're seeing, but this is an important moment to play out in terms of how Bitcoin's price performance does show up. I mean, this environment of market volatility that is really induced by cross-border tension and, supply chain, complexity, like this should be Bitcoin's environment. And so the price performance has actually been pretty disappointing. And it definitely has not delivered that unique diversification that, we saw from it in some of those other stressed market episodes. If anything, in this particular one, Bitcoin's correlation with equities has increased from where it was before.
Tamara Cohen is the chief investment officer at BlackRock. She states that trying to analyze Bitcoin during this adoption trajectory is the tricky part of analyzing Bitcoin. The environment of cross-border tension, supply chain complexity is the ideal environment for Bitcoin. However, she's disappointed with Bitcoin's price action. My opinion towards Bitcoin's price action and crypto's price action in general is that it's amazing it's this high considering interest rates are as high as they are. As soon as the Fed starts lowering to 0% interest rates, we're going to see a tsunami of wealth headed into crypto.
I'm very used to the crypto community's disappointment in ETH, but I do have to say, IBIT is the wrong benchmark.
Yeah. We're benchmarking against the most successful in history, obviously.
I think for investors, the framing around Bitcoin and their interest in Bitcoin is quite specific to its potential diversification properties, store of value. Understanding how to create a valuation framework for Ethereum or, any other token gets more complicated. And I think one of the things we've seen in the investor community is you might be really bullish on the, utility of the public Ethereum blockchain, but not know how that translates into value accrual to the native token. So I think that's one dimension. And another is that I think largely investors have felt relatively exposed to mega cap tech and felt a correlation to that with any potential incremental allocation to ETH.
Every crypto bull run, we see Bitcoin outperform all the altcoins, and then it goes sideways or even retraces, and then we see the altcoins catch up to Bitcoin and even outperform Bitcoin's ROI. This time will be no different, except for we're seeing it a little bit more stretched out as far as duration is concerned. Bitcoin has had the benefit of being the digital asset with clarity. It had clarity from the SEC. Now, I know a lot of you are thinking about ETHgate and all of the controversy that surrounded consensus with the SEC, but they still didn't have clarity. They may have had favors in their direction, but they never had pure clarity.
Allocation to ETH.
Do you think that there's a story problem for Ethereum right now? If Bitcoin is, digital gold, what's the story of Ethereum? And is it too complex of a story right now?
I don't think that the Ethereum story is any more complex than, frankly, any of the altcoins.
Yeah.
I think that crypto does broadly have a data and standards problem in terms of, how do you start to look at these different tokens and applications and understand where value accrual is and is going, and where do you get the information to do that analysis?
Yeah.
So I think that is really complex. I don't think that it's a marketing problem.
Yeah.
Financial applications that are completely on chain is going to give the protocol value and therefore the token within the protocol value because you need the token in order to transact on the protocol. Seeing an equity market completely on chain would be an example of this. When considering Ethereum, there was a lot of experimentation that happened on Ethereum. This was the origin of DeFi and NFTs. There's a lot of great things that started on Ethereum, but it didn't stay on Ethereum.
It starts with the investment thesis. And I think it is really unclear what the investment thesis is with respect to like a very broad array of altcoins right now, because I think one of the issues in crypto is generally like, what are the, like, where are the winner apps going to be? What problems are actually going to get solved and how? So right now, a space that we pay really close attention to because we can see the problem it's solving is tokenized money funds and tokenized treasury funds, because the movement of cash and collateral in the capital markets ecosystem is very suboptimal and can clearly be improved by blockchain technology. So as that starts to play out, and as we start to kind of see what protocols, what applications, what companies succeed and are solving real problems, I think we can work backwards into the investment thesis for them. But I still think we're kind of early innings in figuring out like who are the winners and losers in terms of the adoption trajectory for the technology overall. And you kind of need a view on that to invest in it.
You heard Samara, it's still early innings. And the reason this is still early innings is we haven't even had the regulations to support a lot of the different real world assets that are coming on chain. She mentions that BlackRock is focused on money market funds and tokenized treasuries.
To this point, and still to this day, crypto and blockchain is still a niche investing environment. We saw the big mega funds raise sort of 4 or 5 billion back in 2021, and they had a problem trying to deploy that amount of money. This is still very new industry. The deal sizes are still very small. You know, you can't sort of wash money into the space when it's actually not ready. It's still fledgling, I would say, as an industry. That's going to change radically in the next 5 years, I would say, because now we've got governments and regulators on our side. We've been in a period pretty much through crypto's history of fighting against regulators and sort of people in authority. So we're all sort of recalibrating in this, new paradigm that we're in. But with that, bigger check sizes, bigger investments, more confidence, because you can deploy more money into a space where you've got more clarity on the rules of the road, 5-10 years down the line. So that's the big change that I think we're going to move into. But are we there today? Not quite yet.
Okay. These extremely wealthy sovereign wealth funds and institutions are just starting to dip their toe into Bitcoin. And this is why we're seeing Bitcoin outperform the rest of the market. As Washington starts to regulate, and as we see more and more regulations come down the pike that are in favor of altcoins and different digital assets, we're going to see their exposure increase tremendously. And this is going to push the entire crypto world up
at scale. And right now, we're on a mission to expand capital markets so that they can support more people who want to, save and invest, and also more companies, and not just public companies, who want to consume capital for all of the kind of incredibly interesting and exciting investment projects that are there in the world right now, whether they're AI related or infrastructure related. Like, we're kind of at a moment where expansion of capital markets will deliver more economic growth. How do you expand capital markets? Pretty much starts with, data and standards. And I think indexing is pretty foundational. It will be foundational to crypto. It will be foundational to private markets, if only to describe, even upstream of index investing, like, what does performance look like? What's your benchmark? How do you know if you're outperforming or underperforming the market? Like, you need to define the market. So with that as the stated mission, like we need bigger markets to support more investors. We're looking for the next 100 million investors. We have our digital asset strategy, which we've talked about.
The markets are siloed, and with tokenization opens up markets for everybody on Earth to participate in capital markets. The more people that participate in the capital markets, the higher asset prices can go because there's more money pushing up asset prices higher and higher, and also gives accessibility for businesses who utilize capital in the most efficient ways.
I think that we are really early in our digital assets journey, and as I said, I think we are really bullish on the potential for tokenization to improve access to capital markets and make them work better. So we are like very much focused on the path to more tokenization in markets.
More tokenization.
We are very focused on the utility of bridges to investors. So whether that is an ETP that kind of brings more access to crypto to, onto TradFi rails, or whether it is like we talked about tokenized money fund, some of the biggest consumers and investors in tokenized money funds are crypto native institutions that want more sophisticated, treasury management capabilities. So
according to Samara Cohen, we are still early in this venture for digital assets. Even some of the largest funds, they're not even investing 1% of their net worth into Bitcoin, let alone crypto. There are sovereign wealth funds in the Middle East that have vast amounts of money. Just exposure to digital assets will change the game. When she speaks about bridging, she's referring to blurring the old world of traditional assets in the new tokenized economy.
We will continue to invest in our capabilities to build those bridges. I think this question around crypto as or crypto is it's such a broadly defined term. Like if I say digitalized capital markets, like people need to be invested in capital markets. But I'm curious your thoughts on that. Like, what is the turning point where more people's investments go on-chain than off-chain?
Yeah. I mean, I think at Blockworks, we basically just see this as we're creating a new financial market here. And you've got all these assets in traditional kind of old databases, and we're just moving assets into a new, maybe more efficient database.
Yeah. And I love that analogy. I think attention must be paid to the transition because, look, I could stipulate if you and I were sitting together and coming up with a vision for global capital markets from a whiteboard, it would be, much more tokenized than, markets are today. But we have huge functioning legacy markets, and how you get from point A to point B is something we need to spend time on.
Yeah.
And I spend a lot of my time thinking about that and how these markets can be as interoperable as possible for a long period of time as well.
Ripple is an example of an acceleration of tokenization. They bought Hidden Road and are rewiring their internal infrastructure for RLUSD and the XRP ledger. I'm certain Samara Cohen took a look at the Hidden Road acquisition, although she did not mention this in the interview.
Fascination with the market and with all things that can improve how we serve our clients. We started to get more and more bottoms-up interest from our clients. And then it is really important that you have internal champions who educate and engage and are patient. And I would put our head of digital assets, Robbie Mitchnick, solidly in that category.
He's done an incredible job.
He really has.
Yeah.
Robert Mitchnick is former Ripple and now is head of digital assets at BlackRock.
I think is if you look at the top 50 on something like CoinGecko or CoinMarketCap, I don't believe in 40 of the 50 of those, right? I think there are games being played with market makers. I think there are
I feel it is necessary to highlight this moment. A lot of coins that are on CoinGecko, CoinMarketCap, you'll see that their prices, their market caps are extremely high, yet you don't really hear too much about them. Part of the reason is each coin, in order to get listed on exchanges, needs to hire a market maker. And one of the market makers in the crypto industry are not ethical. Market makers are there to even out liquidity. They take on the different buys or sells. They take on the opposite of whoever's buying and whoever's selling, and they're continuously doing this. An AMM is an automated market maker that is always looking to take on the opposite side of a trade, and this is to form really fluid liquidity. There's a crypto investigator that exposed a lot of these market makers and posted pitch decks. I believe there's 5 or 6 of them at least that were offering to 10x, 30x a coin if the money was provided to do so. Have you ever noticed coins that were looking really attractive during a bull market? Everybody was talking about them and then they dropped 99.9%. Well, a lot of the reason for this is because of these unethical market makers.
How many crypto assets do you actually think are investable right now from an institutional lens? Bitcoin and Ethereum.
I'm not a deep enough student of kind of the institutional ecosystems in the other coins right now, but in terms of the conversations that we've had with institutional investors, they are really largely focused on Bitcoin right now, particularly in this environment. Ethereum is still a distant second.
Distant second.
Yeah.
So we're not even talking about revenue generating protocols or anything like that.
And remember, we're talking about the institutional investors who are broadly in 60-40 equity bond portfolios and looking to figure out what the new sources of return and diversification will be for them. They want both of those, and that's what's bringing them to private markets. It's bringing them to Bitcoin specifically right now.
Yeah.
And then a whole host of other kind of more systematic alpha generating strategies.
Yeah.
The largest funds that are focused on 60-40 portfolios, so 60% equities, 40% bonds, or vice versa, are only looking to invest in Bitcoin. And this is the reason why Bitcoin continues to make all-time highs and look stronger than most altcoins within the market. But this is going to change as regulations come forth.
Like that.
I think that makes sense. I mean, look, another conversation you and I have had a lot is the path forward of kind of policy and regulation with respect to digital assets. And I think one of the things that is so complicated but also exciting right now is that a lot of existing regulation just doesn't contemplate what blockchain technology makes possible, right? It doesn't really contemplate like 24/7 trading or atomic settlement, real-time transferability, like all of those things. And so I do think that there is a kind of new set of standards as well as metrics that are going to be a part of real durable adoption of crypto.
Tokenization and 24/7 markets are going to attribute to lower cost. The more efficient the financial markets are, the cheaper it is for everybody to conduct business. It also opens the door for the U.S. government to make more revenue via capital gains tax.
Those are the suppliers of capital, and of course, the consumers of capital are companies who want, and countries and governments who want to spend today and invest, and in doing so, create growth. So that's how we define capital markets. And in the kind of, call it, era that we're in today, right? So the post-crisis era where banks can't do as much lending as they did in the past, governments have deficits and can't spend as much as they've spent in the past, what that means in order to fuel economic growth, we need bigger capital markets. So the meeting place to bring together, consumers and suppliers of capital, it needs to expand. Tokenization will definitely play a role in the expansion of capital markets, probably by addressing the places where there's the most need. And one of those places right now, I do think, is in the liquidity and collateral ecosystem, which kind of makes all of it run.
The U.S. government, as well as other governments, are maxed out as far as debt is concerned. The more they print, the more it shows up in the inflation data, and it undermines the confidence in the currency. So how do you bolster the stock market? How do you push asset prices up higher? By allowing the stock market to be tokenized, you're allowing everybody in the world to participate in the stock market. And when they add money into the markets, they're pushing up asset prices. The higher people's portfolios are, there's something called the wealth effect, and they tend to spend more money.
Or the BlackRock as a whole has thought about this idea of public versus private blockchains?
So I definitely would put myself in the category of, when we first started looking at this, thinking that the path forward would largely be in permissioned blockchains, just given, first of all, the need to satisfy regulatory requirements and also just kind of desire for, control over information. And I think where we got to was in part really informed by the, post-crisis experience of trading venue proliferation. And as much as it was a great idea to create these more all-to-all multilateral trading platforms, the proliferation of them did ultimately create complexity and fragmentation, which was not systemically optimal. So the idea around actually avoiding that pitfall with more the transparency of public blockchains, I think was a pretty important pivot. That's definitely true for me and how I think about it, as well as for us strategically. There's still a lot of things I think that have to be solved in terms of how you build effectively on public blockchains for like institutional grade financial applications, but I'm optimistic.
The private permission systems like R3 were embraced by some of the larger banking clients, but it turns out that this just added more fragmentation and complexity, according to Samara Cohen. She thinks that the future is certainly going to be on public rails, and that means crypto assets. Now, creating regulations to accommodate tokenized infrastructure on public protocols with transparency is going to be the hurdle. There is a lot of privacy laws in banking and financial markets. Again, this is why I think Cardano as well as Ethereum are working on privacy sidechains.
You need certain standards in a market to create investor confidence, to bring buyers and sellers together to meet. And I think it's exactly the same thing with respect to tokenized assets. But there is no question, if we look at how various different parts of the capital markets ecosystem work, they will be improved and value will be unlocked for end investors with tokenization.
Luxury is either the effect of wealth or renders it necessary. It corrupts both the rich and the poor, the former by possession, the latter by covetousness. Thanks, everyone. I hope you enjoyed the show. Please take a moment to like and subscribe. If you enjoy content like this, please consider joining my Patreon.